Bitcoin and cryptocurrency is clearly in a bull market, but are we in the beginning, middle, or the end of that bull trend? Wouldn't it be great if you could anticipate ahead of time the market psychology? Because ultimately, the fundamentals are baked in the price and you can get an accurate indication. We're talking about a 70 to 90% accuracy, and that's what we're going to cover today. My name is Jagir, featured in the best-selling book High Probability Trading Strategies back in 2008. Having been trading the markets for 18 years now, I'm going to bring that technical knowledge so you can better anticipate what is very likely to occur short, medium, and long term. So with that said, let's dive straight in. Over the last decade, the best way that I've found to read market psychology in terms of buying and selling behavior is Elliott wave theory. But most people overcomplicate it. We're going to keep it very simple and very practical. Markets typically move in fives and threes in terms of 1, 2, 3, 4, 5, and an A, B, C correction. And the question we want to ask ourselves is when we're looking at Bitcoin, at what stage of the market are we in? So let's have a quick look at this. So we've had this nice impulsive move. That is what I refer to as a wave one. We had this long drawn out correction. That's what we call a wave two. And then we've had this overextended where the market literally more than doubled in price. And that's what we call a wave three. So now we can have a really strong opinion of the market from a technical basis where the fundamentals are baked in, that if we are at or near the end of a wave three, we should anticipate a healthy profit-taking correction called a wave four. And that means it's very highly likely we're going to see some type of sell-off as a healthy correction before we see a wave five. Now, typically after Bitcoin halving, after a correction of wave four, we typically see a 12 to 18 month bull run, and that's what we're anticipating. So first, what we're going to do is we're going to anticipate where is the highly likely end of a wave three, and then how deep should a wave four go when it comes to typical, most common buying and selling behavior. So let's start with the theory on the left-hand side. So let's do some price projections. Now, what I want you to know is when we're talking about wave threes, most markets typically for a wave three do a 1.618. What does that mean? So we can measure the price of this wave one, and most wave threes are 1.618 of that wave one, and the overextended wave three is 2.618. So let's see how Bitcoin performed. So let's just quickly update the wave count with Bitcoin. So we're saying this looks like a wave one. This looks like a pretty clean wave two. Let's just put this wave one over here. And what we're also going to say up here is this looks like a wave three. Now this wave three is not yet confirmed. So I'm going to put a question mark beside it because we want confirmation before having a solid opinion of the market. So now let's do those price ratios the same way we did on the left-hand side. Let's do it on the right-hand side. So we're going to basically measure this wave one, take it from the low of the wave two. And what we want to know is that a common typical wave three is 1.618, which is around $49,000 Bitcoin. And we can see we shot past that all the way just beyond the 2.618. Typical would have been 64,000. So we are due for a wave three to be complete, and we should start anticipating a correction. A few other factors that give us more confidence that this is likely to be a wave three is something called time analysis. Now I'm going to first do it on the left-hand side. So let's just clean this up slightly. Let's do it on the left-hand side. So most wave threes are typically at least as long as the wave one. And the maximum is something called a low to low to high time ratio. So let me just draw that on so you can really see it. So how long did this wave one take? We can project it from here to get a feel for how long a typical wave three should take. But then we can also take what's called a low to the next high. So we're going to do that on the right-hand side directly. So we're going to measure how long did this wave one take? And we're going to project it forward from a wave two low. And the ratio that we want is the 100%. So we can see we went just beyond that. Now I'm going to set a bit of a broad range. The next one is a typical maximum. So this just gives us a feel. This is the low to low and then the next high. That's what we're looking for. So let's just do that over here. We're going to go low to high. So now we have a time ratio, like a time rhythm zone. So we can see that we're in that rhythm zone. So next what we're going to do is we're going to do a lower degree wave count when it comes to Bitcoin. Go lower degree. Well, when we do fives and threes, there's something called a higher degree wave count and a lower degree wave count. So what I mean by that is over here, you'll see a wave three typically breaks down to a wave one, a wave two, some type of wave three of wave three, a wave four of wave three, and a wave five of wave three. What this allows us to do is really pinpoint where the market is. And Bitcoin has been displaying exquisite Elliott wave theory pattern positions. So we can see this over here. We can draw this here. We saw this initial impulsive hit, a correction. We saw what looked like to be now a typical textbook wave 3 and something called an irregular ABC of a wave 4 and a very overextended wave 5. More common in commodity markets like gold, but can be quite common in Bitcoin because that's where market euphoria kicks in. So what this allows us to do is the more detailed technical analysis. I'm only going to focus on one key Fibonacci ratio, and I'm going to draw it out for you just because you can apply this to any market at any time frame. We're going to measure how far was the wave 1 to wave 3 and do an extension from wave 4. So let me just show you the 3 key ratios. So we're going to measure wave 1 to wave 3, project it from wave 4. And the 3 key ratios you want is 38.2, 62, and 100%. Now on the right-hand side, the left-hand side chart, we can see, let's just make sure I got this 100% on the chart. 100% is what I want over here. There we go. Now what this does for us, we want a cluster. So we can see this is the high probability zone in theory, but now let's do it on the right-hand side with Bitcoin, knowing that this is a wave 1 to wave 3, projected from the wave 4, and we're going to see, do we get a cluster to give us a bigger clue on the end of a wave 3 and if it's due or not. So again, let's do it over here. I'm going to do it in line with the wave 4. So we're going to project a wave 1 to wave 3, project it from the wave 4 low, and we can see the 100% has been exceeded. If it goes beyond the 100%, the next ratio you want is 1.618. It's very rare that it gets to a 1.618 in this ratio, but it means that it's a really overextended market, which means we're due for a correction. So now what I like to do is draw a time and price zone. And this just tells us Bitcoin is in a position to complete a wave 3. Now, has it completed a wave 3? We don't know that yet, but we have some clues, and that's what we're going to go into next. So what we're going to do is I'm going to talk about something called overbalance of price. What does that mean in English? Well, let's just clean up the theory on the left-hand side first of all. Let's just keep it like so. Let's get rid of this, and we want this one here. Right, overbalance of price basically says or means, let's just look at the biggest move to the downside. This is the biggest move to the downside in this whole movement up. But this recent move to the downside, hopefully you can see that it's bigger, as in it went lower. That's also referred to as a break-off structure. That's an early signal that Bitcoin may have completed a wave 3 and began a wave 4. So in other words, where are we in the market right now with Bitcoin? It looks like we're in this position of the market, and that we should be anticipating over the next 6 to 8 weeks a wave 4 healthy profit-taking correction, which will impact the rest of the crypto market. So hopefully that helps you build a roadmap with what you want to be doing. Now, the biggest mistake people make when they haven't got experience is buying at the end of a wave 5, especially a wave 5 of a wave 3, because of all this movement. They don't want to miss out, but then there's a big correction. So we want a healthy correction. So what we're going to finish up on is what is a textbook, typical buying and selling behavior, wave 4 correction when it comes to Fibonacci price and time as well. We're going to do some basics, and there are some more advanced things as well. But before I do that, if you want to learn how to do this for yourself for any market and any time frame, I've literally just launched my free $1 Million Trade System Masterclass. Now, what this does is it goes into the pattern position, Elliott wave theory, but the practical Elliott wave theory that's going to help you long term. Price, in other words, Fibonacci ratios that combine with Elliott wave theory so you can get an accurate feel of the market like you saw us do with the Bitcoin trade right now. Time analysis, again, I'm only doing the basics today, but you can get into real detail on really pinpointing where there's a high probability position for a market to reverse with around 70 to 90% accuracy rate. And then last but not least, the momentum position. We're not covering that today, but this is the final piece of the puzzle to pull the trigger, to get the green light to say the momentum's reversed, we can take this on. If that sounds good to you, it's free. It's in the description link below. Just pop in your details, you get instant access. Probably spent over 100 hours putting this together to give you a full $1 Million Trade System where a key component of it is the technical analysis of pattern, price, time, and momentum. So now let's finish up the wave 4. What you want to know about wave 4s is it's different to wave 2. Now, wave 2, market, like people don't know that there's a new trend. So it's still, there's a big more of a question mark. But when there's an extended wave like this, like a big bullish behavior, you can be pretty confident we're in a bull market, especially that it's overextended. So wave fours typically are not as deep from a percentage perspective as wave twos. So the three key ratios you want, we want to measure wave three. I'm going to do it over here. I'm going to do it on TradingView. By the way, on TradingView, if you click on the left-hand side, what we're using is fib retracements. And we're going to take it from the beginning of the wave three to the end of the wave three. And the three key ratios you want, I'll just make it really clear, is 38.2, also known as 0.382, 50, which is 50%, and 62%, which is the golden ratio, 0.618. That is the typical minimum and maximum price. So now let's apply that to Bitcoin, the live chart. Let's just get rid of these timelines because I like to keep my charts as clean as I can so it's less noisy. And let's just do that retracement. Now I'm going to also tell you about a Elliott Wave guideline. It's not one of the rules. I'll also cover one of the rules, but the guideline is, there were two guidelines. One is when wave two is sideways, wave four tends to be sharp. Not always, but more often than not. It's the principle of alternation. And vice versa. When wave two is sharp, wave four tends to be more sideways. So as this was very sideways, we can anticipate a pretty sharp move to the downside, which will be a healthy wave four correction. Also, because this is so overextended, and there'll be a lot of people making a lot of profit if they were in this zone over here, and the FOMO will be quite high. Don't be overly surprised if Bitcoin gets to typical 38.2 is $54,000 to a typical maximum of 42,000, around 43,000. Now, the other guideline that you want to be aware of, a macro wave three, so the blue count of a macro wave four, typically goes into the range of the prior wave four. Did you get what prior wave four? Well, we did a lower degree wave count of this wave three. This is the prior wave four. So in other words, this here, 1, 2, 3, 4, 5, this is the prior wave four. So we can be pretty confident that Bitcoin is likely, now we'll never know what it's going to do, but it's likely going to come into the range of the prior wave four, and quite frequently will test the extreme of the low of the prior wave four. And that coincides with the Fibonacci price ratios. So now you've got a good feel that if this is a wave three top, that the correction should go below $54,500 thereabouts. What we're going to finish up on is time. We're going to use something called a time retracement. Most corrections typically take a minimum amount of time, and we can get a gauge on how long that should be, a healthy correction. And it's going to be, let me show you the theory first. We're going to take the beginning of the wave three and the end of the wave three. We're going to see how long did that take. And then we're going to project forward in time, 38.2 and 62% in time. And that's the typical time it takes for a wave four to complete. And we can get a nice ballpark figure. So let's do that on the theory first. Let's do the low to the high of the wave three. And the key ratios that we want is 38.2 and 62% in time. 100% we want to be aware of, but it's really only if 62% gets exceeded by a considerable amount. So let's just remove that here. So now what we'll have in theory is a nice price and time zone. And again, it might go beyond, it might go, slightly more short of it, but it gives us a nice ballpark of the minimum time. So now let's do that on the live chart on Bitcoin. Let's take the beginning of the wave two and the end of beginning of wave three, which is the end of wave two, and the end of wave three. Again, take this with a pinch of salt because the wave three top is not confirmed yet, but it looks like it's highly likely to be at or near completion. And we have a nice time and price zone. So what's the dates? Now we know we've got Bitcoin halving coming up this month, and the minimum time for a correction wave four should be by the May 24th. In other words, the minimum time should be after May 24th. So if we do get, let's just say we got a sell-off like this, but we haven't gone beyond May 24th, is likely the correction is not over. So we want to see the minimum price get hit and the minimum time. If the price gets hit but the time doesn't, we'll probably get another leg like so. And that would help give us a clue. So hopefully you found that really, really valuable. So let's just summarize. Bitcoin is in a position to complete a wave three top. We can see this been a textbook wave 3, overextended. If it is a wave 3 top, we should anticipate a wave 4. And wave 4s typically look like this. Now we have a minimum price expectation of 54,000, a minimum time expectation of the 24th of May. If it does come into that zone over here, that's when we want to get ready for the end of a wave 4 and then a 12 to 18 month bull run, which is pretty typical for Bitcoin, to go to a 6-figure Bitcoin over this year and maybe even going into next year as well. So if you found today useful, like and subscribe to the channel because I'm going to do a lot of TA on different coins in crypto. Let me know what you want me to look at because you can get a real good, strong feel using Elliott wave theory combined with Fibonacci price and time. There is momentum as well, which also helps us pinpoint a few other things as well. But you can really have objective, logical decision making so you don't need to lean on your emotions so much when it comes to FOMO, fear of missing out, fear, uncertainty, and doubt, and everything else. So if you like the channel, that would be great. I really, really appreciate it. Check out the masterclass, and I'll see you very soon.